So U.S. President Donald Trump has moved to put taxes of 25% on heavy truck imports. Our guest covers one manufacturer called PACCAR, a U.S. manufacturer, and has more on the impact on the stock. We'll have a look at how PACCAR investors are reacting. We're joined by Jeffrey Kaufman, president of Logistics, Transportation and Equipment Research at Vertical Research Partners. Thanks very much indeed for joining us. Talk to us about PACCAR off the top, if you would. I mean, is this something of a windfall for them, less competition?
Hi, good afternoon, Andrew. Thank you for having me. Really, this tariff is leveling out what was an unintended uneven playing field. Originally, when the 50% aluminum and steel tariffs went through, it put the U.S. manufacturers at a bit of a disadvantage because you had companies like Daimler and Traton that were manufacturing in Mexico and then shipping the entire vehicle into the U.S., which was USMCA compliant, so there was no tariffs on that, versus domestic manufacturers like PACCAR and Cummins, who does the engines, were paying tariffs on the parts that came in from outside the U.S. in their vehicles and assembled the vehicles in the U.S., so you had kind of a 10 or 15% cost increase for the U.S. manufacturers, whereas there was no cost increase for the people who were shipping trucks in from overseas. So this tariff is really meant to kind of level that playing field because it's tough when you're, say, Cummins or PACCAR and you've got a big cost increase like that and you're trying to get that cost increase back from your customers, whereas your competition doesn't have that cost increase. So this tariff's not really a windfall so much as I think it levels the playing field that was accidentally put in place by the earlier tariffs.
That's an interesting angle. Yeah, I hadn't thought of that, that of course they had to pay more for their materials. Can you give us any kind of a, we don't talk much about truck manufacturers. What kind of market share would PACCAR have, for example? Can you give us a ballpark?
Well, sure. PACCAR is really kind of viewed as the quality leader in truck manufacturing. Their trucks tend to have a higher residual value. They tend to last a little longer. You got to pay more to get a Kenworth or a Peterbilt vehicle. So they've actually successfully grown their market share over the last 5 years from about 27 to 31.5%. And then beyond the truck market share, they've actually introduced their own engines. And they're putting their own engines in their vehicles now. About 40% of their trucks now have a PACCAR engine. And that's something where they're growing parts content and increasing the profitability on their platform because they are providing more of the whole truck to the customer as opposed to just the truck with somebody else's engine.
That's interesting. So Kenworth and Peterbilt are two of their big brands. Actually curious about these big rigs. Do they last for a long time? How many years would you get out of one? Is there any kind of a guideline?
Well, it depends how you're using it. Right. So most big rigs, if you're in over-the-road transportation, you're running 100, 120,000 miles a year, your first 3 to 4 years. Around the 5th or 6th year, you start to see more maintenance being required. So you're not having the truck as many days. So maybe you're running 80 to 90,000 miles a year in years 5 through 8. Then most fleets typically trade out of their truck first life into second life. There's something called an engine overhaul, which typically happens around 1 million miles. And then the trucks don't really run that hard. Maybe they'll run 40 to 60,000 miles a year. So you'll see some of these trucks move from over the road to maybe local city delivery or pickup and delivery in what we call a less than truckload fleet, like TFIs. And those trucks can last another 5, 6, 7 years. You can have 12, 14, 15-year-old trucks in the fleet if you move them into kind of lighter duty service. But in terms of running that rig every day, 8 to 11 hours a day, it's really the first 5, 6 years where you're going to be successful doing that.
That's a tough job, being a truck driver, I'd say. A lot of stress keeping to the schedules and worrying about bad drivers out there. So I think you said PACCAR was at about 25% U.S. market share. We're very tight for time, but who would the other big names be in North American heavy trucks?
Well, PACCAR's probably about 31% market
Oh, I
share
see.
right now. And where they really tend to dominate are the high value fleets and the vocational business. So people that are using work trucks, things like that. They're actually one of the largest providers of vocational trucks in the country, along with Volvo's Mack division. In terms of the total market, the largest truck manufacturer in the U.S., I probably should say North America, would be Daimler's Freightliner brand. And that market share is probably a little closer to 40–45%. So between the PACCAR market share and the Daimler share, you're probably talking about 70% of the industry, maybe a little bit more. The remainder is split between Volvo, which is in the 20s, and then the Navistar division of Traton, which is in the mid to low teens.
Thanks, Jeffrey. Would love to have you back, talk more about trucks. Really appreciate you giving us the time today.